Hey everyone, just checking the audio. Can you hear me on Zoom and on YouTube? Don't be bashful, speak up. Let me know if you can hear me.
Cincinnati can hear you.
Okay, good to hear.
I can hear you.
All right, there you go. People, welcome.
Thank you.
This is going to be one of my very favorite meetings ever. Primarily because Jason's going to be doing a lot. And hey, Stuart, thanks for showing up again, man. Appreciate it.
I'm here for a while.
Okay, good, good. You might even learn something today.
Hey, how about that? Did you see Carson's latest email, Bob?
What's that?
Did you see Ron's latest email campaign?
No. Better not talk about it on here.
No, but I'm going to send you a copy.
Okay. Is it good?
It's interesting. He's definitely lost his way.
That's funny. Okay, YouTube, you can hear us. That's good. We got about 50 on. I'm still letting folks in over on Zoom. So, Zoom folks, today, you're not going to have your best friend, Jay, helping you out on chat. So I'm going to ask you guys to speak up and ask questions. The other thing I'm working on for Hey YouTube folks, I'm working on putting a Discord server together so that we can do even a call-in show on the live streams for the markets, which I think will be interesting as long as we don't get some weird trolls to show up. And everybody that's on everybody that's online tomorrow, tomorrow's live stream, market live stream, won't start till 3 p.m. I'm actually speaking at another engagement tomorrow. So I will be tied up and I'm going to jump off of that call right on with you folks. So we'll kick it off right around 3 o'clock. We'll spend the last hour markets together and go from there. So somebody on YouTube said Bob's right about everything, but except Trump. I don't know what that means since I've never said anything about Trump. People are reading between lines, maybe. All right, so we're getting a few people in here. Just trying. Jay, are you in yet? I haven't paid attention.
Yeah.
Okay.
I just got in a minute ago.
Okay, cool. You better be in.
It's curtains for me if I'm not, right?
Yeah, these guys are going to be in trouble because I'm going to be sitting here, nothing to say.
Had no other game plan except for what I'm doing.
Yeah, it's all about you today, son.
All right. And I want to say a quick shout out. I just saw Danny Tran in the YouTube chat. I want to say hi, Danny. Welcome to the community. I just was watching the daily commentary show this morning or just a little while ago before the show, and noticed he had made a nice comment on there about you being right most of the time. And if you were right yesterday and today, he's buying in, and I have to give him props because he's true to his word. He signed up today, so we just welcome him.
Thanks,
aboard.
Danny. Appreciate it, man.
All right, just a little while ago before the show, and noticed he had made a nice comment on there about you.
Oh, you're gonna have to turn that sound off. Somebody.
There was an echo, wasn't it?
Oh yeah. Well, it's about a
Stuart.
20-second delay in YouTube versus yeah.
It's not me. I muted YouTube.
Hello, Stuart. How you doing today?
Hey, Jay, how are you, pal?
Oh, pretty good.
All right, we'll get going here in just a few minutes. We're just kind of chatting it up, just bringing in a few more people. Welcome, Wayne. I always count on you coming from great land of Oz.
Yeah, hi Bob, how are you?
Good.
How was the conference?
Oh, it's tomorrow.
Oh, it's tomorrow, is it? Oh, not today.
Yeah.
Okay, right.
Yeah, so right after, so we're not going to do the live stream tomorrow until 3 o'clock Eastern time, US. So.
Okay, yeah, I'm getting the days mixed up. Different time.
That's all right.
Australia
So am
and-
I. Don't feel bad. I am too. So.
It's COVID. Nobody knows what day it is or what time it is.
Wasn't there a song in that? Was it Chicago?
I barely even know what year it is. I want to forget 2020. Erase it from the record books, history books.
All right. So I would go ahead and let me just put up a couple things over here on. I've actually got the Russell up here. This will trigger people in. I don't have my normal stuff on. I've got the vest on today for you guys on YouTube, so you can see the vest. So anyway, yeah. So today is Wavetech training. We're going to be focused on setting up new portfolios. Jay's going to go through the procedure he goes through, utilizing our screens, using a lot of the elements that you get when you are I get a call from Washington DC right now. Might be important. I guess I've been getting political calls lately, which is interesting. I usually don't get these things. Still haven't been surveyed. Anyway, the what we do on this segment of this live stream is really go through the software, different elements of it. Then we field questions from our folks. We have a Zoom meeting that we're doing, and in a minute, Jay, I'm going to make you the host, so you have your screen ready to share. You can do all that stuff here in a minute, and if need be, I can take back control over here. But anyway, we'll just go that route. But all we're talking about today is software and making money, and how to make money, not just trading, but how to make money in running portfolio strategies and discipline. It's interesting. There's the guy that's introducing me tomorrow on this symposium I'm in. This guy named Michael Gayed, and he's got like 200,000 Twitter followers. So I've been wanting to meet him, and I'm going to meet him. He's going to introduce me tomorrow on this symposium. So it's kind of interesting, and I'll explain why. It's an interesting introduction that's about to happen, and but there's the whole plan for today is Jay is going to run most of the meeting. I'm going to be hanging out in the background. I'll try to get in on chat. We'll see how we go. We got Stuart is also online here, and he is I don't know, what is it, Stuart? 12 years you've been using the platform?
I've been around there 12, 13 years.
Yeah.
No.
And using it to run his business. He's one of our institutional users, and so he brings in a lot of experience, and he and I've talked at least 3 hours on the phone and personally at least 3. So we've
That's
got
a Saturday afternoon, Bob.
we have a history. Let's put it that way. I've got quite a few folks out in the field on the institutional side that we have histories with, and most of them good. So I'm just still letting some folks come in here while I'm talking. It usually takes us about 5-6 minutes from our starting time that we target to get this thing going. But the whole thing, and yes, you can use Wavetech for mutual funds. In fact, it does really good on mutual funds. The interesting thing, this is a question from YouTube. Just while we're still waiting, I'm still letting folks in here. Just bear with me. But yeah, so I developed the platform by using mutual funds, and this product originally started in 1994, believe it or not, and we developed a thing called VisiPort, and it stood for Visual Portfolio, and it was done in Visual Basic and a Microsoft product. And so we did our very first iteration of this software way back when, 94, 96 was when this came, and the first real version of the Virtual Portfolio Manager was in 96. And so we developed it utilizing Fidelity sector funds, and we ran it at a broker dealer out of Chicago. We had about 800 reps. We were very successful with it, running substantial amount of money. Used to do a radio show in Chicago, Illinois, called Your Money or something like that. This was long ago, back in the late 90s. And so mutual funds, long answer, mutual funds work, yes, and you can use all of that. ETFs, mutual funds, there's 16,000 symbols in the platform, and there's not 16,000 stocks. So stocks are probably around 62, 6,400. The next 6, 8, 7,000 are ETFs, and the rest of mutual funds, or combination of all the others are stocks or ETFs and mutual funds. And for a lot of strategies that are very effective, especially in our institutional community, is I'm not a big fan of bond funds unless it is not bond funds, mutual funds, unless it is a bond mutual fund. Bond mutual funds, there's some amazing bond managers out there. And there's some good equity guys too, don't get me wrong. It's just the internal fees of running equity strategies with mutual funds. If you have no choice, you have a 401k or something, then absolutely that is something that you would want to do. And matter of fact, just rambling on about this kind of interesting way to start, it will segue, I think, good into what Jay's going to do here today. But Stuart, I'm going to throw you under the bus here and talk about, maybe the use of mutual funds or ETFs and how that works, like especially 401ks and stuff like that. Maybe you could add some flavor there for folks that are trying to run their own stuff.
Sure, I'll be happy to participate in any way I can.
He's not even getting paid for this. He's paying me. That's
Yeah, that's the thick part. Bob, people are saying that they say they can't see the speaker screen on Zoom.
Okay, yeah, because I haven't started because I'm going to give Jay the control, but I'll do that anyway. Just make everybody feel good, and that way you'll have something to look at. You'll feel a lot better about that. I bet you can see it now.
There you go.
Yeah, so why don't you address, I guess, utilizing mutual funds, bonds, ETFs, what you've done with that as far as running portfolios and doing those type of things.
Well, I mean, from an account size standpoint, for me, that's what drives whether or not I use an ETF portfolio versus a pure stock portfolio. Only because a smaller account on the institutional side, to get them the same broad exposure in the market, ETFs will give them that, at a smaller account size. Although, again, the industry is changing now. Now that we have fractional share ownership and a lot of brokerage accounts available, it will allow us to run smaller stock portfolios if we want to, more focused portfolios in smaller accounts. Not a fan of mutual funds, quite frankly, because I feel that they're extremely expensive. If you really want to take a look inside your mutual fund, if you do own mutual funds, there is a site, Bob. I can't remember. Is it my mutual fund?
I haven't used that thing in so long. I don't remember, but it gives you the internal cost of the funds.
Right.
Yeah. Yeah. I'm trying to think. I'll think of it in a minute.
One of us will come up with it, but typically in your mutual funds, if you really were to dig in deep into your prospectuses, you would find that you're typically running somewhere between 3 and 5% internal costs on those funds. That's pretty expensive. So that basically means to you guys that are out there investing in mutual funds that before you see a dime, the fund manager and the printers and everybody else are getting paid out of that 3 to 5% before you see any return. So, from a pure economic standpoint, try to find an equivalent ETF if that's the way you want to play in the market and have that broader exposure. Because typically the ETF is going to have somewhere around a cost anyway, typically around 10% or thereabouts of its equivalent mutual fund.
Yeah. So the real issue though, is 401ks only have mutual funds for the most part. Sure. And that's what we really want to address, because I've got guys over on YouTube asking questions like, and he said is absolutely right, that most Americans probably only have 401 in their 401ks have mutual funds available to them. And I'll just address this. A lot of the mutual funds that are in some of the bigger plans aren't even public mutual funds. They're customized funds for the corporation. And what you can usually find from that is you can find the, we'll call it the clone or the equivalent of that fund. Because literally some of these corporations are so big, they've managed to get the mutual fund companies to just run an individual fund just for those companies. So if you work with a large corp, that could be happening. But I think, one of the things, just to kind of add in what, the cost is there. If it's the option you have, then that's what you get. And I've always wondered if some of these companies are getting a little skinny under the table. I don't know if there's any fees that get passed around. I hope not, but hopefully they're skinned out and they lower the fees for some of these 401ks. I'm not sure about that.
Do we have the ability now to run the R3s and R5s in the system?
No, we don't. We've never had that ability.
Right. I know we didn't. We've not had it. I wasn't sure with the new software.
Yeah, it's possible on Expert we might be able to. That's actually a good question for Mitch on that. So, but yeah. So if you do have mutual funds in your 401k, you can use them. And even if you're doing something simple, like even you just want to keep a balanced and do a 60-40, but do it on a managed basis, that's something you can do, where you just literally take whatever equity funds, maybe you put 2 or 3 equity funds and put a bond fund in. And the way that I've done it in the past, so let's say you wanted to do a simple managed 60-40 strategy, I would take and put 60% in, like 3 funds in equities and 2 bond funds, maybe a short-term duration and a long duration, and then maybe do a large, mid, small, or do a, some whatever strategies they have in a 401k. And that would be, that would also be a way to be able to handle that. Looks like you had something you want to say there, Stuart.
Well, basically, what I was going to suggest is go along those same lines is if you want to use this system to run your mutual funds in your portfolio in your 401k, then obviously stick to simple themes. And you already kind of hit it on the head. If you want to do a small cap, a mid cap, a large cap, and want to know when to get in and out of those particular areas, then find something in the system equivalent to or its street version of that fund.
Yeah.
And kind of build it from there and let the portfolio give you those buy. Let Wavetech give you those buys and sells so you can move your money around efficiently.
Hang on a second here. You'll have to unmute, Stu, to come back on. You got to unmute.
Got it. So, I mean, the 60/40, again, that comes down, I'm seeing some questions as far as even Roth or pre-tax, all that type of stuff. It's all driven by age and goals and objectives, guys, and your capability of what you can and can't put away.
Yeah. Yeah. So, so I'll set up Jay here. We'll get this thing going. Just kind of got into this. Actually, this conversation gave us opportunity to get a lot of people in the room that just some of the folks as they're getting signed in. So we've got a pretty good meeting actually today. I think we've got a combination. We've probably got a couple hundred people hanging out, so that's good. And yeah, and the questions we're getting on this is people want to see mutual funds. So Geomatic, why don't you throw up some funds maybe that are in, throw them on a timeline that you have in your 401k, and maybe we can locate some of that. That would be that would be awesome, rather than just guessing. And we could see if any of those funds are important. And we could go into a whole show. Matter of fact, that might be something we want to do in the future, is just talk about 401ks and how to handle this, because this is one of the things, the purpose for me wanting to put this product on the street was to help a lot of folks actually manage their own funds. Sometimes there's frustration with not having control of your money, and then by being able to interact with our software platform and actually customize that might be I think that sounds like a really good meeting to do. And there's there's a lot of stuff. If we actually prep for it, Stuart, we could actually probably do a pretty nice presentation.
Oh, totally.
Yeah.
Totally.
And that would.
It wouldn't just be for our U.S. clients, even though 401k is particularly U.S. I know a lot of our foreign people out there may have their own private pension funds that they're running as well, in whatever format it takes in their specific country. So yeah, I mean, we could address an awful lot of it. But
yeah.
If we're going 401k, it would definitely be very much U.S. audience.
Okay. Yeah, I'm just looking here. Yeah, so here's a question I can't answer that Matt says, should you do Roth or pre-tax contributions? That's right up your alley there.
Well, again, it comes down to what you want when you're done. When you're done working, it depends on how old you are, and it depends on whether or not you need the tax break up front or whether you need it down the line. If you're in your 20s or 30s, I would suggest that you do Roth and start out with as much as you can put into it, and hopefully step it up 1% every year till you hit your max. Then when you finally retire, that money will be totally tax-free under the Roth regulations. If you're in your late 40s or early 50s, Roth may not provide as much of a benefit for you going into retirement. It's a very broad answer, but it really is a very individual answer that needs to be given on that.
Yeah, yeah. That's why they always say talk to your tax consultant before making these decisions, right? Something like that. Yep. And you know those guys, don't you?
I do. A couple, 2, 3 of them.
Yeah. Yeah, that might be. I think that's. I think that would be actually a really something I think we'll embrace, because what we've been doing on this show, and we have a lot of folks that come to this often, which are the same. a lot of the same folks. I think this is a subject that would be very, very well received, and something I would like to document on the channel, because this is, like I said, this is one of the main goals of me addressing the public themselves, bringing out these products that we've been doing. Tomorrow I'm speaking to primarily just institutional firms tomorrow, and and that's where I've hung out for a lot of years, and that's all wonderful, but there's so much of this that even a simple old clunky product like Wavetech can do a lot for you in this arena. That is really key in doing things. And when you start to get in, I would even say that Wavetech can do is somewhat limited. Jay and I had a conversation earlier today. Just he's like, can I bring expert in, because there's so much more things you can do. And for right now, I am this afternoon finishing a video. We are going, Thursday is my launch date. I'll put it out there in the public, so I put a gun to my head and make sure I get this done. That we're going to be
hold you to it. We're gonna hold you to it.
I know, I know. So I got to do it. It's just I'm so close to having this thing done. It's all on me and Jay and Mason, and they've been chomping at the bit. I've been getting punched from both sides of those guys, so we're really good. But the Matt is actually answering. I appreciate your participation here, Matt. It's a really good questions. Do you put money in Wavetech or use it simply to know when to buy and sell? It tells you. It's a modeling process. It does not have the ability which to do orders. That is next gen though. When we get down the road here, is the ability for you to actually route the orders to your broker, custodian, whatever you want to call them. So that is in play down the road. Hopefully not too far down from there. So
I just want to address one other thing in this conversation, and then we should get to Jay and let him do his presentation. But most 401ks these days do offer some form of Roth 401k. It's not just a Roth IRA for anybody that thinks it's only available in IRAs. A lot of times it's available through your employer 401k, especially if it's a newer plan or they've recently updated the plan with their custodians.
Okay, that's good to know. See, that's something I would never know. Yeah, and I think that would also be kind of cool to actually maybe put it's something I've been talking about, and I know there's regulations and stuff like that some people are can't talk about certain things in the open public, but I think that would be good to bring in some good advisor types that would be able to address a lot of these questions that people have. And I think I know people like yourself, Stuart, and some others that are that are capable of bringing in those sorts of information and things that you folks would deal with day to day on dealing with people on all that. So that's really good. Yeah, I mean this is I guess this is what happens. I think we're into like 20 or 22 of these Wavetech shows. So we're now at the phase where we've got a lot of users on the platform now, and we're now trying to get you folks to the next level as far as being able to actually do the things that it's capable of doing and have discussions like this. And I think this is really good. And what Jay's going to show you here in a minute is going to be is going to walk you through starting from scratch. Matta has been talking about something, Jay, that I think might be a way to do some of this stuff, but to actually, he's talking about, show how to have no money on the sidelines and then how to implement the money. So hopefully out of what you build here shortly, we'll be able to actually walk into that type of, like, okay, here's the open positions. Here's how we'd address that. And it's good that we got Stuart hanging around because it's ready to go. Too bad I see a guy over on on the YouTube channel that could be helpful in this conversation as well.
I was gonna say Jake's starting to chime in.
Yeah, I know. Yeah. So, but yeah, so listen, we've got a really good community. People have known me for literally a lot of years, like Stuart and other folks that we've been servicing from a institutional level for a very long time, and we still are doing that. In fact, the meeting tomorrow, I suspect, we'll probably get a number of new firms that come on board with us on Portfolio Expert, and all of the goal. I just need to put this out here. Everything that I have done for my entire career, going back, well, we won't give it the entire career, but since maybe 1983, the first 3 or 4 years, has been around risk management in some form. Or that's why it's funny that I came up with this line, I help you manage your portfolios and protect your wealth. That's actually what I've been doing for a very long time for institutional folks and for myself and family and everybody that's out there. That's my main focus. It's all about that. It's about it's capital preservation's always been number one. You got to have capital to play. If you lose all the money, you don't get to play. So you need to have like some balanced approaches and not just 100% speculating on trend lines and bull flags on stock market indices. There's much more to this world than that, and that's the whole. It was not. You folks probably should understand that I didn't start the YouTube channel to do this. The YouTube channel got me to do this, if that makes any sense. Sometimes is it the chicken or the egg? I don't know. This was the egg, I think. You folks kind of came to this channel, showed me the interest in the work that I'm doing, and we're just continuing to bring you into more of an institutional world, a viewpoint of managing money versus speculating. And trust me, I love to trade with the best of them. Okay, that's fun stuff. But there's also a lot of serious money, and I as Stuart said something earlier, with fractional shares now, fractional shares and the ability ultimately to automate order flow, there's a whole new world ahead of us, folks. And I want to be part of that. I've been around this business a long time, and I think what Jack Vogel was still working when he was in his 90s, if I'm correct. He's the guy that's founded Vanguard, and maybe that's me. That'd be kind of cool to be an old wrinkled old man, look like the Emperor from Star Wars on the tube, helping you folks to make some money and to manage all your portfolios. So Jay, I'm going to make you the host if I can find you here. We're going to try it. Hopefully it works as smooth as it did when we tested it earlier.
I hope so. I'm glad we did test it earlier.
Yeah, I don't want to be your mouse hand. So
it won't work that way.
I know it won't. So just bear with me. I'm just yeah. Matter of fact, if you're talking, I'm just trying to see how to do this. I sure hope this works on this, because it should once I find you. Yeah. There you go.
Don't get moderator control wrong person.
Yeah. Hey, listen, it's just about yours right now, son. So get yourself ready. Oh. You should be alerted, and you should start to see everything come up. And I'll try to get it on the screen once you get that, so the YouTube folks can see what you're doing. And thanks again to everybody for, look at that, we're in Star Wars.
We are in space.
We are in space. But I've got
the segue from the Emperor to the Rebel Alliance worked great.
It really did, didn't it?
That wasn't planned either, I don't think. We didn't rehearse that beforehand.
Yeah, I've got it. No one can see this yet because I can't get it. View options. I've just got to get this off the screen, so it's on the wrong monitor that I'm sharing. So that's the only thing I've got to figure out. And I did it earlier, but it doesn't want to let me do it now.
Great.
Yeah, bear with me 1 second, folks, because everybody's just seeing my Wavetech right now.
So they don't even know what we're talking about. What they be doing in space?
Wait, hang on. I got it now. Okay, now, Stuart, we see you on the phone live, so just so you know, turn your camera off. Anyway, so all right, it's all yours, Jay. Light up the screen and go for it.
Okay, so everyone can see now. It's all good.
Yeah, you can pay it. Somebody's asking, Geomatic. Yeah, well, you can play. You can pay for it with credit card. You just join as a guest, and yeah, so you can use your credit card. We only have PayPal available to us. We actually have hired a firm that is going to help us do a lot of other things on that. So blow up your center screen, Jade. Let's.
Okay, we got it.
Whoa! It's the famous bell.
And real quick on for Choimatic, I think he pronounces it Koimatic. I think that's how he.
Okay.
Yeah, he had to email me like a week ago. It's Koimatic.
Koimatic.
I think I got there.
I think. Yeah. If he knew how bad I butchered anybody's name, he will not be. He will not be offended at all.
And by the way, if anybody wants to know what the internal costs on their mutual funds are, you go to personalfund.com.
That's it. Yep. Personalfunds.com will tell you can put in your fund. Did they limit you yet? Like you can only do so many and they want you to buy something?
I think they might, but you can at least go one by one and then come back. I think that's basically what it comes down to.
Yeah, so you can see what that internal cost is. It will scare you. Actually, you'll see in some cases over 2% internal fees.
And more.
Yeah, and more. Yeah, it's true. Yeah, and mutual funds are old legacy Wall Street technology, but they're still around. ETFs are the next level, but when we get portfolio expert on the street, we're going to show you how to seriously build your own ETFs and run them seamlessly. So anyway, all right, Jay, it's all yours.
Okay. So what I want to do is show you how to build a portfolio. We're not showing you the mechanics of how just to build a normal portfolio, but actually how you actually go through and pick stocks and come up with a true portfolio. What I always do is try to come up with a theme. I'm usually theme based. On some of them, the theme can just be that you want something that is very diverse and covers most, or if not all, the different sectors. So that's your theme, is that you just want a diverse theme. And one of mine is called Vast Horizons, which is as you can think, Vast Horizons is vast, so it covers like pretty much all the market sectors. But a lot of my themes are a little more focused on maybe 2 or 3 different sectors. Sometimes one. I usually don't get that diverse unless it's a monitoring portfolio. Hold on 1 second. So what I do is, especially right now, because I was starting this last week, so it works really well with the training on today's show, is I was coming up with a new theme, which my old theme was the small block Chevy 396, the Hemi Cuda small block series, which small block was getting creative with small block engines, meaning small cap companies. And what I'm doing now is the big block series, and it's actually the large cap companies. So when Bob wanted me to start, covering some of these shows and doing a little more training and everything, I went ahead and stopped developing those because I wanted to start from scratch to be able to show everybody my thought process and how I go about doing that. So what I do first, and this is how I came up with the small block series, I get my spreadsheet ready and everything. So what I do, I have the stock screen up right now, and I'm just going to show this is an easy way to do some of the stuff, right? Is the stock screen, I went ahead and all the small block portfolios that I built was based solely on the stock screens that we did, and I had a lot of luck with that. So I wanted to start with this. You can do anything if you have any ideas on your own motifs, what you want to do. Just kind of search through symbols that way. But this is an easy way because we've already condensed and done a lot of the work and screened a lot of these stocks that run really well within the database. So what we're going to do, since we're doing large cap, what I do is go through here and I highlight all this. And basically, I know that's really small. Hold on.
It's not bad. It
Is
looks
it
fine.
not bad? Can you?
Yeah, that's good.
It was even small for me. I was having trouble seeing it. So the first thing, so what I'm going to just do is weed out, because I didn't want to do any, well, I already messed up something. Hold on. I was doing this all this morning too. When I threw it in here, I was doing it. There we go. Okay, that's what I wanted.
Guys, can we make the YouTube screen larger so that everybody can see what's going on in the Zoom?
Is that pretty small there?
Yes.
Is that better?
Is that getting better?
Well, on the Zoom it looks fine, but on YouTube they can see speakers, they can see participants. They're not seeing the full screen.
Okay, let me see. That'll be on me. So go ahead, Jay. Just do your.
Yeah. Okay. All right. So what I'm going to do here is sort through and just grab all the large cap companies. And we'll show you the first part of this is really easy. So all I'm doing is I'm grabbing and separating large cap. So what we're going to do is go to Virtual Portfolio Manager, create and modify. So what I'm going to do is call this, I'm going to go with Big Block 427 right now. And I'm actually going to do daily, weekly. So when I'm testing, if I want to test how daily does on its own, I'll do one as a D or daily portfolio, then I'll do weekly, and then I'll also do daily, weekly. So I'm going to do DW as daily, weekly. And what I'm going to do is here's the inception date. And Bob, do you have control? AJ's trying to enter the room. Do you have control of that? Because it's showing up on my screen.
Okay.
I should just admit him, I guess.
Yeah, I show them. Hang on. I show everybody's in. I let AJ in a little bit ago. Go ahead and just keep going.
Okay. So with the inception date, 5 years back is the default setting for the system, and that's pretty much what we stick with. I do sometimes go back 10 years. A lot of times 2008 is a good testing point. So if you do start with 2006, 2007, I do that. For training purposes, I'm going to stick with the 5 years. We're going to go back to 2015. And what I'm shooting for, part of what I do when I come up with the first idea on a motif, like Big Block Chevy or Big Block series, is what am I shooting for size-wise on beginning equity and how many symbols. So what I'm going to do is I usually, when I first develop a portfolio, I try to stick from around 25 symbols, so between 22 and 25 symbols, which means a beginning equity of at least 100,000, but I usually go with at least 150,000. And what happens is when I'm shooting for 25, I don't just go with 25 and start working with that. I'll usually go for like 30 or 32, 33. I shoot over a little bit and then work my way down. So what I'm going to do is I'll just start with 150,000 and I'll keep the minimum transaction at 1,000. And then here, this is really important for low activity, high liquidity. We actually want high activity, low liquidity, which means it's going to invest and participate a lot more with the market, and you're going to have a lot better results when you go with the high activity.
Hey, Jay, I'm going to add something here on that. Go back to that page for a second. If you read through this, in the past, we were RS. I can't use our acronym. I guess I could. RFS. Read the screen. This was all of this dialogue was actually aimed at investment advisors and considerations they had to make. When it comes to an individual, we just basically threw that all out and said use the high activity, because everything in this world used to be absolutely driven by the cost of a transaction, and that is no longer part of the equation. So most of this dialogue here, some had to do with suitability for an advisor and what kind of clients they had that they were providing process to. And in this case, you guys are doing it yourself. You're going to go with the high activity. You want the best possible returns, and then you're in control of your investment. So that's why we're telling you to skip over. You could still read that, and maybe it does apply to you, I guess. You could want a moderate activity, and you don't want to be overly aggressive. But for outright returns, what Jay's showing you right now is exactly it. Sorry to hijack your presentation there, Jay.
No, absolutely. That's fine. And I was going to even talk about this. I know I've mentioned this before, but I really like this guide too. And this, I think, will help with a lot of clients starting out with Wavetech for the first time and building new portfolios, because I followed this formula right here, not quite to the T, but close. So it gives you an idea, because this is a common question of, well, how much do I need to invest in the portfolio to make it profitable? So, 15 to 20 stocks usually go at the minimum of 100,000. And right now I'm shooting for 25 stocks. So I'm going to up it to about 150,000. And because if you don't put enough in, you're going to saturate the portfolio with too many stocks and not enough money to manage it all. So you're going to hamper your performance. So, and it also, there's other variables, how expensive per share is each stock that you're putting in, and that'll be a consideration as you start building these. But this does help. Like I said, I believe last week we were asking if you have about $20,000, how many stocks? And I've been testing it out this year, and I want to say maybe 7 to 10 stocks, but if they're fairly expensive, meaning $50 to $60 a share, if you can find some good companies that are $20 to $25 a share, maybe you can jump up to maybe 12 symbols. But if you have about 20,000 to invest, then I would say start with about 8 to 10 shares and play around with that and experiment and see what you get. So what we're going to do, we're going to go back. So average transaction fee, that is for institutional clients. So we can just go next. We'll skip over that. So what I'm going to do in this portfolio, I actually want to use the optimized daily and weekly. So here we have optimized weekly. So this is the 3 boxes. If you want to stick strictly with weekly, we always recommend you, in the first box that's optimized, go ahead and throw your symbols in here, and then let the system tell you what's optimized between the weekly 1.2 and 3.2. The same thing with daily. Go ahead and put, if you want to stick with daily models, go ahead and put the symbols in the optimized box and let the system pick and go through and pick which one is optimized. But right now what we're going to do, and this is a common question again, is clients want to use daily and weekly. They just want to use the absolute best optimized model out of the 4. So I've been working with this and suggesting at the very bottom, optimize for daily or weekly. So you're letting the system tell you out of the 4 trade models what is absolutely the best. So what I'm going to do here, I had already cut and paste the list of stocks that I came up with. So they're right here. So what we're going to do is we're going back up here, click next. We're going to go to portfolio snapshot. And then you can see here the different symbols and the model that the system said that was the optimized. And we just want to make sure all the green dots here are green and not red, or if the dates here is in red, which I will show this later, that means that data has stopped. So we'll go over that later. So we're going to go next. And again, this is for billing and for institutional clients. So we're going to skip over management fees and billing cycle. And we're going to go to the initial allocation factor. So right now, when I first start researching and developing portfolios, I do not mess with the allocation factor. I just go strictly with whatever the system has calculated for the portfolio that I'm building. I do not touch that at first. So we'll just go with what the system has calculated. So we're gonna give it a minute. We got it right here. Oh, I didn't even put big block. I put big. So
That's
I'll
all
go
right.
back. I'll
No,
show
that's
you.
That's
Sorry.
all right, good. We know what you're doing.
I'm getting the butterflies out of my stomach right now. So
There you go.
So we're just gonna wait a second. It's allocation queue right now. You can click up here, portfolio access. Okay, so now it's in the process of building the portfolio. It's loading symbols. So it usually takes just like anywhere from a minute to two minutes. Sometimes you get it right when it starts calculating. It's what, like 30 seconds. So we'll click this again. Okay, so it's run through, and right now for year to date we're only at 2%. So what we do here is I'll click on the name of the portfolio, and this is going to bring up, this is the first stuff I start to look at. So right here, I already picked, I didn't even plan it, but it was just picked, came out to be 22 symbols because I was only sticking with that very first. I'm actually going to show it right here. So on the stock screen, all I was doing was just going with the accelerated growth. I didn't grab anything else. So on this one, I just wanted to kind of show the process. So I wasn't really going for 30 to 35. We'll go with that in a minute. But for right now, just that's all I picked was the accelerating growth. So what I do is I look down here and I start to look at my annual returns. And one of the really helpful items that I use is symbol returns. And this gives you the readout of all the symbols and how they performed within the portfolio. So give me 1 second.
Hey, listen, I want to shout out to both Stuart and Jake, a couple of our institutional clients helping out everyone. That's awesome. Makes me feel wonderful.
You're welcome, Daddy Bob.
Be careful. We have the switch. We could turn you off.
I know.
Okay, so what I'm going to do here, what I'm going to show you, since I was originally going to go with 25 total, I didn't get enough, like I said, where I usually try to put 30 to 35 in. But what I'm going to do right now is, this doesn't hurt the training at all because I can show you what I still do. It doesn't have to stick with 25. Hold on. Why is that? Oh, great. It's not doing what I want it to do.
Yeah, Jay, while you're doing that, I'm going to answer a question on YouTube.
Oh, absolutely.
Yeah,
sure.
TJ, I see Jake and TJ going back and forth. Yeah, some of the restricted funds. Here's what you can do. There's a hack here that I will give you folks, and this will go because we got a mutual fund thing. You know how it is, Jay. I've not been able to watch this before, so but this is important to address because it's going on here. And so let's say you have a highly restrictive fund. What I would do is have two funds that are very similar, have similar constituents, similar strategies, style boxes. And then if you get a sell signal and you get out and there's a restriction, you can't buy it back for 60 or even in some cases 90 days. There's a big fee, big penalty for getting out and getting back in. Then you can use the one symbol that you put in the portfolio as the primary. But let's say you get a buy signal, now you get an exit, and only 3 weeks, 4 weeks later, you get another buy again, and you can't buy it because there's a penalty for buying it back too soon. So what you do is you use that signal to buy it, but you want to make sure you have a fund that's similar in nature, and you use the original symbol in the portfolio as a proxy for the signal for the other, that we'll call it the replacement or the proxy mutual fund. So now what I do is I got a buy on the mutual fund. The Wavetech doesn't care. It doesn't know that there's penalties. It's not going to charge you any penalties, but you replace in your actual portfolio that secondary fund. And one of the things I plan on building into the platform is a proxy type situation where I've been wanting to do this for a very long time. So I see Jay's playing around with a lot of stuff over here, so I'll fill the gap here. But yeah, so all you need to do is to have two funds so you can still do the trades, but you proxy out the other one, and you want to make sure that they have a reasonable coefficient, meaning they map out really close to each other, and more importantly, that they map out well within Wavetech. So you can put them side by side and take a look at the performance, the buy and sell dates. They just need to be similar, have good performance. When fund one, we'll call it, which is the original fund, it's just an alternative method and dealing with this same situation of these costs, because these funds, some of them, they are the top performers, but because of the fact that they might be a top performer doesn't mean they don't decline in value. And so you use this proxy situation to be able to substitute that fund, and then what will happen, you have a new buy, you have the sell. On the next buy, you go back to the original fund because plenty of times pass by, so you won't have any penalties. Okay? Hopefully that made sense.
Good little hack.
So
And it also helped me.
I saw you. I can see
it was
this.
a technical. Oh, go ahead.
No, go ahead. It's all yours.
No, it's one of those typical things. The whole morning I was testing this out, getting ready, and it worked fine, and everything was great. And of course, the live bugs kicked in, and it didn't work at all like I wanted. So
of course not. Yeah.
Roundabout. So I think I'm set again. So what I'm gonna do real quick, I'm gonna go back a step and go back to summary. So the first thing, before I modify, what I do is I start looking. So I have 22 total symbols. So put that over here. This is just kind of what I do to start tracking and comparing as I'm building a portfolio, because it kind of goes to the same adage. If I'm shooting for 22 to 25 symbols, I'll start with 30 to 35 symbols and whittle down. Well, the same with the portfolio. If I'm trying to come up with one or two portfolios, I'll sometimes have 5, 6, or 7 portfolios and start whittling them down to what I want. So that's why I go ahead and do the spreadsheet like this, so that I can compare and see which one really is the best. So I know right now I have 22 symbols. So what I do is I go down here. So right now, so I started with $150,000 equity, and I'm up to $215,000. So what I'll do, I just put this in a roundabout, and then also what I do is I'll grab the year-to-date numbers. If this will, so it gives me an idea of the performance. Sometimes, I'll do, no, not that. I'll get this stuff.
Hey, Jay, while you're doing that, I saw a question. I did have the chat line up, but it was showing up taking valuable space on the YouTube channel, so I had to take it down.
Oh,
but
you're seeing it from my perspective. You're in my world now, right?
Exactly. So there was a question about 1232. 12 is just a more aggressive model. It has about 30% more buys than 32, but it always comes down, you always put the symbol in research. You click on research, put that symbol in, and always find the best optimized model is typically the answer. We have done some shows that I went deep in on that. And I'm also, just for the folks on YouTube, I'm actually have this show up on my phone, watching it on my desk so I can see what you guys are seeing. It looks like it's in pretty good shape now. I got rid of some of the junk on the screen. So looks like I'm able to use that as well. But yeah, so but a great chat on the YouTube channel as far as doing this proxy trade and that I was talking about. There's a lot of workarounds in this world, in the financial world, and so anyway, that's good stuff.
Yeah, the other thing I would throw in there, Bob, is for those of you who are worried about your 401ks and what have you, a lot of these 401ks nowadays are offering self-directed brokerage account options inside of there. Now, they may have a minimum for account balance, but it's certainly something to look into. And then that way you guys could run whatever you want inside.
Wow, that's a cool idea. Thanks for that. That's awesome. I'm not sure on YouTube. Jay comes in really loud. He's got this Howard Stern voice going. But yeah, so what Stuart was talking about here, folks, is that why don't you say it again, Stu? Because you've got it.
No, what I was just saying is that nowadays a lot of the 401k plans that are out there do offer self-directed brokerage accounts or SDBAs. So I would suggest that people look into that first of all. And if you have sufficient money in your 401k at this point to meet the minimum, it might make sense for you to move it over to the self-directed side and run whatever portfolio you want at that point, without the expenses of the internal mutual funds, or the internal expenses of the mutual funds. It's just one thought. And if it's not available, maybe you just go talk to your employer and say, hey, how about getting us a self-directed brokerage account inside the 401k plan?
Yeah, no, that's excellent. So hopefully you folks are picking up on this on YouTube, because that's really a great option, and that opens up the entire world now to your to getting returns and doing some amazing things for your life and your future.
Okay, so what I've got here right now, and this didn't come through on the other, this last column to the right is actually the ER rating for each symbol. So this is one of the ways I'll filter through. I'm going to go largest to smallest. It's supposed to go largest. There we go. So this is one way to sort through. I know we always talk about the ER rating, and that's one of the ones we go through. So what we have up here is the highest rated symbol up here, and then the lowest down here. This is one way. I'm going to show in a second. I'll give an example of how this works, but this is one of the things that we're looking at. And in these columns, it shows how much the portfolio made or lost. So most of everything is positive. You notice here there are some that negative. There was a loss. That's another area where I'll look, and if it really lost. Now, if it lost a little bit, it's not the end of the world. I don't try to just get rid of every single negative price in there. No, Bob tries to say I cook the books or do that kind of thing, and I don't always try to do that. But Bob always goes with the really good lesson that he taught me when he learned that I was building portfolios and starting to have some success with them, is that it may be in the red, but that doesn't mean it's a bad symbol, because one of the things you'll have to do is go and look at the history of the whole symbol. And when you're looking at the year-to-date numbers when you're building the portfolio, 2015 is a good example. 2018 is another good example, where those were kind of lean years. A lot of other portfolios from other people not using Wavetech were maybe down 20%, 15 or whatever. And most of ours, maybe they just broke even a little bit. They were in the green a little, or they were in the red, but only 2 or 3%, maybe no more than 5%. But what I have done is I will go and look at other symbols to come in, or these symbols that, yeah, maybe they overall did negative, but look at those years in question, like 2015 or 2018. Did they do better in those years when they were leaner? Because my COVID Crusader portfolio kind of does that, where one of the reasons for the success of COVID Crusader portfolio is that it has companies that like Hormel Foods, Campbell's Soup, General Mills, things that everybody needs regardless of what's going on in the world or in the economy. And especially, I guess, when people were, what are they? They were hoarding food. They were just going nuts buying. Now Walmart's like crazy. they were just hoarding all the food, so that kind of drove the prices up on those companies. But look in the lean years, maybe these symbols were doing good in those years, and if they weren't and they did do negative, then take them out. There's some that if they're negative in the thousands, I'll just take them out. I won't even deal with them. Because again, like I said, if I'm shooting for a specific number of symbols and I have an over of that amount, I can afford it to get rid of a few. But for this demonstration, I'm strictly just going to go with the ER. And what I'm going to do is I'm going to actually separate. I only had 22. So what I'm going to do is I'm going to take out. I'll just take these, and I'm going to separate them for right now. So what I'm going to do is I'm going to make a second portfolio, and what I'm going to do is copy this. So let's see. What we're going to do is I'm going to create a new one, and this time I'll actually name it the right thing. Let's see. Oh, that's okay. So we're going to do a second one, and the same thing. We're going to keep all the settings the same, and even though I'm putting less symbols in, I'm still going to keep the equity the same. I'm not going to change that. So again, what we're going to do is go all the way down to the bottom. We're going to keep all this the same. We're going to optimize for daily and weekly. We're going to check the snapshot. Everything looks good. No red. Everything else is good.
Also, you should point out before you go back 2 steps. I just want to point something out.
To the snapshot?
No, go custom portfolio page.
Okay.
You'll notice that there are some symbols that. There were a couple symbols that actually go to the snapshot. You'll see that there are some daily, some that did better on daily there. So you'll see that was there, and you want to make sure you got all green buttons and the data's live, and almost we should plan on having a red one so you can know what to do.
I've got that all queued up. It's all locked and loaded.
Yeah, and
I will be showing that. Go ahead.
So how do we say geomatic? What is it? Quiomatic?
Coimatic.
Coimatic. Okay, I'm gonna get it right, dude. Don't worry. But yeah, he just asked a question. Yeah, we're setting up a back test. So a couple things on the back test that Jay's doing here is he's setting up the back test so you can see how the activity is going on, how the performance is, so you can start to extrapolate out what the models are doing, what the process is doing. There's a lot of things like tomorrow, I have a very short speech, but tomorrow I'm talking just about the allocation methodology that is inside of the software. It's the same thing on both of our platforms, and and that's really where Jay's leading us to. So go ahead, Jay.
Okay, all right. So yeah, we're going to go back through. So we're going to go to the initial allocation factor. And again, right now, this is just the start of me researching for this motif of portfolio. So I'm not going to touch the allocation factor right now. I'm going to go with what the system has recommended. And so while this one's actually in queue, what I'm going to do, and this is actually good training because some clients are like, oh, how do I update or how do I modify my portfolio? So over here in the big orange box mod, that's our modified. So this is my first portfolio. So what I'm going to do is I'm going to actually put in the proper name. So I messed up, but it actually works great for training purposes to show you how this works. So right now in this field, I entered the proper name, but you'll notice over to the right that's highlighted, it has not changed yet. If you were to just hit any of these column or section headers, it will not make the change. In order for the change to take effect, you have to click next.
Yeah, next is like enter.
Okay, so it already knows that, okay, I'll have to.
Yeah, I thought you already had one in there. So I would just call it, yeah.
Yeah, because that's right, because the other one, I'll just do it this way. So at least you'll notice that, yeah, the bright red box strip will come up if there's a warning. So yeah, when you click next, it'll actually execute those changes. So yeah, if you only skip the different sections that the changes will not take effect. So that's all I wanted to do on this one. If that's all you want to do is just change a name, once you've made that change, yeah, you don't have to go through and click next for everything. You could just go all the way down to allocate finish and then click that. So now that that's done, now you're going to see that my modified or the second portfolio has actually run. Now I know it's negative for the year right now. So let's just see what, so I didn't really change a whole lot. So what we're going to do is bring our spreadsheet back up. I know that's probably, can everyone, is that, we'll make sure everyone can see this.
Yeah.
So yeah, we're just trying to see what the equity. So my change actually did worse than it did better. So that's not what I was going for, but
you needed to know that. That's how you're going to go through the steps of looking at how the backtest is working and what the effectiveness is, all of that.
Correct.
So actually what you found out is leaving all the symbols, even the bad ones in, were better than taking them out.
Yeah, it actually worked better.
Yeah.
And
okay.
And that's why we go through this. This is why we go through this trial and error and this whole research process.
Let me take on that for just a second, folks. And this
Sure.
is what Jay was talking about. I told him, don't worry about when there's symbols that look like they're negative. So this is internal dynamics that happen within a portfolio. Okay. This is, I will keep this Bob rant down to a minimal. Okay. But what's happening is even though a symbol, so, okay. Yeah, I got to set this up right. So the process of the manager and the allocation tool, it is actually sending out rebalancing. Jay, could you bring up the first portfolio and bring up the trade log for me? And one of the things that I know already happened in here is to is you're going to see these reallocation cells about midway down on the screen. The more that you hit that reallocation models, this is where I always say this is where the magic happens. And I always reference my old partner Tony had this lithograph, and it said two professors standing there, and there's very complex calculation. In the middle of the calculation was a little squiggly line, and it said, and then a miracle happened, and then he had the answer. Well, these reallocations are where the miracle happens. And what they do is they force this system to sell symbols in midstream of a buy and sell. So I'm going to try my best to draw this picture for you. Is you have an entry price and an exit price, and these orders intervene in partial sells of a position between the ultimate buy and the ultimate sell, or the buy and sell of the symbol, which could end up to be a loss. Okay, so we could have bought something at $10, it rolled over and we sold it at $9, so we lost $1. But because of these orders, it went from 10 to 14 and back to 9. We were selling as it was going up little pieces of that trade, and they would not have occurred if it hadn't been for these reallocation cells. So the end of the story is that the reallocation cells causes what we call a dynamic profit harvesting, and it harvests profits even though the symbol itself isn't making money. And I can tell you, we've handled over almost 1,500 investment firms, and I've told this story to all kinds of people, institutions, and most of the people just don't get it, because you can take a symbol that went from 10 to 9. I'm making this up, so this isn't a real. But meanwhile, we sold some at 10.50, we sold some at 11, we sold some at 12, and we sold some at on the way back down at 12 again, and then we dumped the rest out at 9. But when you add that all up, we sold the average at 11.25 or 11.50. We actually made $1.50 on the trade instead of losing $1 because of these transactions that occur. And so you always want to make sure that when you're building a back test, that you see these orders. If you had to do all these orders, this isn't work. This is profit harvesting. This is not, it may feel tedious. Soon we're going to have this so you can automate this and it won't even be a problem. But at the moment, you put these orders in, and I told everybody for over 20 years that smile, because this is where 65% of the profits come. Even the trades that work out really good, to have the good buy entry and a good sell entry, you're even harvesting better prices out of there. The average buy sell profit is better during this time, and that is that is where inside of a portfolio, this is where the magic actually happens. 65% of the returns of these portfolios are because of this dynamic profit harvesting situation, simply called a reallocation sell. I'm done. Thank you.
You done?
I'm done.
I was gonna mute you, cut you off.
I have the power ultimately.
You're gonna put me in my place real quick. Okay, so all right. Let me go back to what. Now I got to get back in my.
Yeah, I'm sorry, but that was important because there was a lot of folks need to understand, and that's why this profit harvesting thing is so powerful.
Yeah, I love the reallocation. That's why I called some of my portfolios the real whiz, because I just really crank those numbers. But anyway, so I was playing with the colors a little bit, so it shows up. Is that coming up clear enough? Yeah, so green is all positive years. So actually, yeah, as you could see, even though I removed some of the symbols and everything, it actually dropped down our profit. So as Bob said, as we were saying, even though some of those symbols may have been in the red, they still were helping support the portfolio in other years when the other symbols weren't performing as well. So basically, okay, we got two portfolios here, and I'm still just not really pleased with the performance. I know I can get more out of this. So what I'm going to do is I'm going to bring up the stock screener again. If I can get organized here. So what I'm going to do is, because I went with the accelerating U.S. growth and everything, and so what I'm going to do is go down, which is one of our favorites. I love this. What is it? The magic formula value. So again, what I'm going to do is at the moment, I'm not going to play around it anymore with those other symbols I chose. I'm actually going to start with a fresh batch, and let's see what we get this time around. And I know this is a big list, so
I won't interrupt anymore, so you can get into flow. But I think there was.
Go ahead. This is going to take me a minute anyway to get this going.
Yeah,
so
I just
ahead.
want to make sure we can get everybody back to their families. And a bunch of East Coasters. It's getting late, so. And I actually have a call in 20 minutes. I have to be on, so. And I can.
Okay, I'm going to wrap this up here.
No, you can go. I'll
okay.
walk out. I can go in the other room. Not a problem.
Oh, okay. So again, what I'm going to do is I'm just weeding out. I just want the large cap companies. So I'm going to do what I did before and alphabetize everything. So yeah, this is a long list. There's a lot in this magic value. There we go.
But it's also a diverse from sectors and groups, everything. It's got a little bit of everything in here.
Yeah, it does.
That's probably why it became a favorite. It just hits on so many industries.
Yeah.
And while Jay's playing with this stuff, I said I wouldn't talk anymore, but I'm going to. But one of the things that doing screening that to locate stocks that also helps is that the metrics that we're looking for here flow in and out. So I guess the best way that I've always tried to frame the power of fundamental screening to bring them into a quant environment is that when you're doing these things, it focuses now we're looking at I forget what the total number of stocks are, but I think we're looking at 6,000 or 7,000 individual symbols here, stock symbols that are being screened, and it's flowing down literally into, I don't know what the total amount is, but 100 symbols, let's say. But what it's doing is it's focusing out of all of this fundamental metrics that are important to understand. And now you've literally, you've got that funnel that I've showed you in the past on that, where it's upside down. You have a large set of symbols, you hone them down fundamentally, and you keep going down to the funnel. And ultimately what Jay's doing is sifting through that funnel to get it down to that very bottom, 20, 15, whatever number you're trying to get to, and trying to look at all of those. Jake, give me a symbol on, oh, you already did. All right, Jay, all yours again.
Okay, thanks. So yeah, while Bob was talking, I pretty much did the same thing I did before on setting up a brand new portfolio. Same settings, same price, same starting equity, starting date and all that. But what I'm doing is I'm going with a fresh set of symbols to see if I can get better performance. And what I'm going to do real quick while this is running in the allocation queue is what we were talking about earlier. When you have some warnings on Sharp Dressed Dude and Mad Max, you'll see that there's some warning signs here. So what you'll do is click on this red E, and what's going to happen is it's going to pop up this box, and it's going to tell you that there's missing data with this company. Now, I'd already done the research on Yahoo Finance to make sure it was legitimate and that the company was bought out or stopped trading, so that it's not just missing data from our vendor. So when you get this warning, make sure that the symbol actually has stopped. If not, if it's missing data but it's still an active symbol, just email us with through the message log here. We'll send us, or I'm sorry, the feedback will send us the email that you send, letting us know that there's something wrong with the symbol. So what we're going to do, so I'll go with Mad Max. So what we're going to do is Mad Max, I'm going to go to modify, and I'm going to jump down directly just straight to portfolio snapshot. So what's going to happen here is for Covenant Transportation, you'll see in red here. Now the dot is still green, showing it's active. That's why it's giving us the warning. But in red, it's showing you this was the last day of data the system received. So like I said, I already researched this symbol ahead of time. I know it was legitimate. It stopped trading. So what we're going to do is click on the green button, and it's going to bring up this menu box. And it is imperative that when you stop these symbols or enter the date for these symbols, you have to enter the date that is shown in red. Because if you end it, like let's say 7-3 or 7-4, most of the time it doesn't stop the symbol properly, and you'll still get a warning. The system will still think that it's an active symbol. So what we're going to do here is go here to July and then 7.
And you also want to make sure it's a new entry. Don't change the current entry.
Correct. Yeah, the current entry has to be the date that was initially set up for the portfolio when you first started.
Correcto.
So yeah, we're going to do new entry here and make sure we got the year right. I'm still messing up. Okay, so and then click stop. We're going to click apply, wait for it to run, and then here under current entry, it is going to show us now that we made the proper stop and we entered the information properly. So when you close this window, now you're going to see that the green bubble turned to red, which means it has officially and effectively been stopped. And then from there, we just will go. Normally what you want to do to keep the balance is find another company to replace it, to keep the balance on an initial allocation factor. But I don't know, Bob, if you want to weigh in, but to me, since I already tweaked allocation factors anyway, I don't see that it's a big deal to maintain a balance. Well, what's your thought on that?
Do that. I was reading. I'm in that.
I'm so sorry.
Go ahead. No, tell me again.
No. Well, I wanted your opinion because I know originally when you were training me on how to build portfolios, you said, okay,
you don't want to change
a balance.
This. Yeah. If you change this allocation factor, it will change the entire back test. It will change every balance, everything in the strategy. So you want to make sure that stays the same.
Correct. And what I was asking, was someone else asking
Yeah.
a question?
No, I was just gonna say, if you change that number, it becomes an unmitigated disaster to fix.
It does. It really does.
Uh,
I've had clients. I did something. I modified. Now all my year-to-dates are out of whack. What
Yeah.
happened? And I
it's
go ahead and help them.
it's a disaster. The good news, I guess, if you do decide to upgrade up to Portfolio Expert, we have a revert back to previous because of that.
Well, and also I always forget.
Yeah,
Right here, you can snapshot your current symbol list.
why don't you do
and
it?
Yeah, let's go ahead and do this. So yeah, I'll just do test one.
You know what I do is I put a date on it, so I know.
That is the best thing.
Yeah,
So,
so-
when you go here, it'll come up here as test.
Yeah.
And you can reload and revert back.
But I would, before you just brush over this, because this is a big thing, is I would do something completely different. I would do a snapshot before I change anything and call it, I would do the date. I'd go, whatever, I'd call it something, the current date with a no changes. And then I would do the changes. And then I would actually go and then name the changes.
Yeah, and I didn't start with that. I kinda
Yeah,
kinda
no,
jumped
that's
right
okay.
into
I
it.
just wanted to go that. One of the other things you can do, folks, is you can have an alternative portfolio running. So let's say you change some things here and you did a change. You could, if you do what I just told you, you could go back and a month from now, 2 months from now, and go, what if I didn't screw with this thing? What if I left it alone? What would I look like? And you can go back and actually validate that you made the right idea, or go, oh man, I should have left that thing alone. But you learn from those type of things as well.
Yes, absolutely, and yeah, and then it's a nice tool that option's in there. What I was asking earlier, and I caught you off guard, was what I was talking about the allocation factor was when you have a balance of, okay, this one's got 31 symbols, so normally, so CVTI stopped trading, we stopped it, so that's one less symbol, and normally, if you want to keep it optimized and balanced with the allocation factor, you're going to want to bring another symbol in to take its place.
I jumped in too early.
Yeah, and so my question to you, Bob, was, since I am now learning to play around with the allocation factor and beef it up, is it really going to matter that do you really need to replace that symbol? Can you just leave it with one less?
Yeah,
And I wanted your
yeah,
opinion.
no, that what I would do is this. If this happened and you're running, where Jay's illustrating that you're doing a portfolio that you're updating fundamentally, then I would have two things. Is I would do the update on fundamentals, but I would also schedule them like every 3 months. You could do them monthly, but I think it's way too much. So you can go in and do every 3 months, you would go and do this screen, update it. So if you did take something out mid-cycle, like because this one got bought out, then what would happen is I would leave it out until I did my next review, and then I would make sure I ended up with the same beginning number of symbols, which was 31 or whatever that number was. I'd always maintain that number of symbols, and you can have fewer. It just means that you're probably going to, in some cases, you're going to have cash. You're not going to hit that rebalance tickets that I talked about a little bit ago, and all of that as well. And we will take a look at a couple of mutual funds of getting when you get done with this, Jay. So
okay, I'm almost finished with this part. So so right now for big block 427 number 3, this is the third iteration now. At least on the yearly, we're up a little bit. So just from quick visual, glancing at it, it's already doing better for what I want, but I don't know what the year to date. Is it better? Is it worse than the first 2 tries? So I'm going to click on the name. Got our fingers crossed. So, okay, so it definitely did better. 371,000. So what I'm going to do is bring my spreadsheet back up and make sure I got everything. I got all the names messed up. So we know that all that we haven't changed anything in the starting up equity. It's still 150,000. So Yeah, so we're running 371,000. So I'm kind of rounding it.
Yeah, and when you're doing this screen, make it full, just so I'm just looking at it on the phone.
Okay.
That's going to help a little bit on the YouTube folks.
Okay. So what I'm going to do again, I'll just grab. I'm grabbing the year-to-date numbers, so it'll also help show you where the improvements were made to the portfolio compared to the first two attempts. So let's see. So, okay, I got you. I got this thing all botched up. Yeah, I hear that. Yeah, I'll get it. So that was actually the number of symbols, and I think on the new one it's 31 symbols. I was mistaking that for the year-to-date number. So the good thing is on this one, it looks like everything's pretty much all green. So let's see what we got here. So you can clearly see right now we've got 31 symbols. So I'm running a little heavy at the moment, and I can whittle that down using the same process of going with ER ratios and also seeing how individual symbols perform. But for right now, we got 31 symbols, the same starting equity, but as you can see, it's not quite double the current equity, but it's darn close. So what we were able to do was, and this is what I was talking about, 2015 and 2018 were both really good test years. And as you can see, 2015 on this one's almost up 12%. So that kind of shows you some of the improvements. So I like this new set of symbols that I'm trying, and I would spend more time to research more of those symbols. And you can see 2018 up almost 9%. So you get a little more idea of where the improvements were made.
So I hate to bring this up, but so if we get real and you're really trying to do a good job, we're not talking about 15 minutes done. We're talking about a fair amount of work, but once you do this initial work, you're done. Now it's all incremental input as you walk it forward, especially in these individual stocks. Mutual funds, which we still have a mutual fund dialogue going on over in on YouTube, is mutual funds are easy because you don't have as many moving parts. In this case, we were screening and filtering on 100 stocks or more, and we had also, I don't know, just about every, I guess, investment group there was available, or investment, sectors, and all different kinds of categories of stocks. Where if you're doing mutual funds, you're grabbing baskets, and it's a little easier, so you don't have you still need to do the initial work. It shouldn't be as hard, but ultimately, when you're doing individual stocks, that initial build is somewhat tedious, but the payday is huge if you do it right. And I know Stuart's done a lot of this, so that you want to make money, you got to work. My dad taught me that when I was very young. Well, I can't remember if it was right foot or his left foot. I'm one of those. Kick me in the pants. Get it going, Bobby. So So this is really kind of breaking down what kind of work it does. Mutual funds aren't for sissies. Just dividend stocks.
I was just saying, that's just dividend stock. Those are the sissies.
Yeah, no. Listen, mutual funds have an absolute purpose in life, and especially as the conversation we've been having in this last hour and a half or so, is these are important to 401ks and investment plans, a lot of stuff. There's still a lot of relevance to this world. And I was actually talking to a new advisory firm the other day, and I told them, I said, you have to understand, my perspective is all returns. You guys do a lot of things for customers outside the realm of the investments, from tax planning to, just planning in general for all types of things. Everything to me is, the portfolio returns. That's all I focus on. That's what I do. So It's much different when you, and it's everything we're talking about here with this. It's worth the work to do this. So.
Yeah, absolutely. So.
And ultimately, you're getting to build your own personal mutual fund, guys. For those of you who are in a position to do so, do it. That way you eliminate the costs.
Yeah, no
or
doubt.
At least you control the costs.
No doubt. No doubt. Yeah, I mean, in the world we live in now, thanks to the evil empire of Charles Schwab, thanks for Robinhood for leading everybody down that trail. You know, I appreciate all of that to them because it's really changed the investment world from who can play and who it's really exciting. I'm excited for a lot of young people. It was very difficult when I was a young guy trying to get involved with this stuff.
So can I show my favorite part now? I've been holding back.
Yep.
I want to show my favorite part. Now we get to mess with the allocation factor. Now that I at least have a portfolio that I'm a little more happy with, and I didn't mess with the allocation factor at the time, I'm going to go ahead and mess with the allocation factor, and we're going to see what changes it's made. So what we're going to do is go back to portfolio access. So for the third incarnation here, we're going to go over here to modify. And all I'm going to do, I don't have to go through any of these things. I'm just going to skip all the way down to initial allocation factor. Now, again, and what we were saying earlier, and this is very important, is once you've built a portfolio and you've set up an allocation factor, do not change it. Yeah, because it'll mess up all the year-to-date numbers.
Well,
So
only if you've implemented it into a strategy that you hope to walk forward. You can still change it at this stage where you're at, but
okay, yeah.
Once you put the money to work, don't screw with this thing because that's going to be the call to us. And we've done this with anybody and everybody for 20 years that have used this. I changed this, and what, did you save your settings? No. Do you know this? No. What can we do? Nah, you're screwed. You know, that's the way that ends up.
Yeah. So I know sometimes I don't know if I'd make a great teacher because it's like I would confuse people more than explain. And
no, you're doing awesome. Clear. You're doing great.
Thank you. I'm trying. But I know I've kind of struggled with how is the best way to say how much do I bump up the allocation factor. And I guess I was saying 0.5, but I guess it might be 0.05. So right now we're looking at the screen, and it's 0.06 is the allocation factor. So what I would do is add 5 to the 6, which would be 11. So what I'm going to do is instead of the 6, I added 5 to it, so it'll be 11. So it's 0.1123.
Now, why did you do that again?
Because I'm just playing around with the portfolio to try to fine tune it and beef up.
I was just wondering why 5. Is that just made up?
Well, it's a starting point. I just want to make. I was trying to give like some sort of a base idea. No, don't go like 2 where you put like a 0 and then add 2 to where it's like 26. You don't want like 26 or like my Ninja Strike. That's 0.3 and it's a small portfolio and that is absolutely massive. Or it's
but you forgot what 6 or 8 stocks in it.
Yeah, that one's about 8. I think it's like 7 or 8.
Yeah.
And it's just maxed out. 0.3 is huge. And I was trying to give more of a suggestion or a starting point so people aren't getting radical and they're just throwing in like a million. They're not throwing in a ton of numbers and just
okay. Okay, all right, fair enough.
But I came up with that as like I guess the minimum I would say is 0.05 and then work up. If you want to just add a 1 and turn it from 0.6 to 16, you could do that.
That's pretty. That's pretty radical. I like the idea of maybe upping it 30-50%, whatever. If it was at 0.5, maybe try 8, try 10. That's what I would do. But just run iterations. One of the things that I talked to Michael, who's our developer, was ultimately being able to optimize and just run like 40 different things and go, tell me the best one, which would be amazing. you know,
Right. Yeah.
just run an optimization and run a range, you know, from what it tells you to some other number, up and down on either side of the allocation. I can't imagine you make more money going down. I've never seen that one.
No, I don't think. I think that hurts it, and it kind of makes it. I don't know if lethargic's the word, but yeah, it's just kind of slow to respond, and it doesn't participate as much.
Yeah.
You know, I mean, that's something I've thrown the number in there a few times just to see what it's doing, and it just takes away all the. You might as well just go to moderate or low activity, high liquidity. You know.
Right. Yeah. Exactly. They don't yield more, so you definitely want to go up in that number. So go ahead.
Correct. Yeah. Yeah. You definitely want to go higher, not lower.
All right. You're gonna be all on your own. I'm gonna leave this thing running. I'm gonna walk out of the room because I gotta make a call.
Okay.
And I will, you know, I'll be back. So hopefully everything keeps working.
Okay. I'm on my own. I'm solo.
Yeah.
So what we got here now, just looking at real quick, I made the changes. Now you can see, I think that almost doubled the percentage for the year to date. So now it's at 10.48. It's almost 10.5. So that right there's a big increase for just this year. So what I'm going to do again, click on the name of the portfolio. We're going to go down here and see what the actual equity is. So now we're at 400,000. So I'm going to bring my spreadsheet back up. And what I do, and this kind of goes off of what I was saying earlier, is I say real whiz is what I name these. So if you're gonna do what I'm doing and try a bunch of different calculations and incarnations of a portfolio, and normally you're wanting to stay with the allocation factor that the system suggested, but then you want to try a few and tweak it, I would rename, duplicate the portfolio and rename it, or put realwiz in the name. That's what I do. It's not copyrighted, so everyone can use it. It just makes it a lot easier so you can differentiate which one you change the reallocation, unless you're doing it for all. But if you're wanting to stay a few with base as you're testing these out. So again, I'm going to look again what it was. So we had 401,000. So yeah, that definitely was that about 30. That just by changing that number, we added 30,000 to the life of the history of the portfolio. So what I'm going to do, again, I'm going to grab these numbers down here just so you can see for comparison purposes.
Hey Stu, I'm gonna bug out. It's 6 o'clock. It's East Coast. I'm going for dinner.
Okay, thank you, Stuart, for joining in again. It was great having you here.
Anytime, pal.
All right, we'll talk to you hopefully next week. We'll see you soon.
All right, bye.
Bye. Okay, now I'm really alone. So anyway, so some of these, it's not going to be radical numbers, but you're going to see 2015, it improved a little over %, and just a little bit. So some of these, it's not going to be a whole lot, but when you're talking about over the course of the whole portfolio history, 5 years back, half % or even a full % over the 5 years will add up. But as you can see, it did, because it added $30,000 to the portfolio just by changing that number. So again, you could go a little higher. Maybe you'll get a little better performance out of it. Again, that's the beauty of Wavetech, is that you can play around with this and try a couple different combinations. That's why I say 0.05 is a good way to start. I know Bob doesn't like to go too high, so you can test it, but maybe if you max it out too much, it may look good at first, but maybe you're hindering some of the performance and some of the profits that could be made. But I usually like beefing up the reallocation factor a little bit. So now I go back over and see if there's any questions. I want to know, I guess what I want to ask, I don't know if I have full control, but for the people on Zoom, if you had questions, if you were able to chime in, I'd be glad to answer them for you. Let's see, I don't know.
It's Wayne.
Hi, Wayne. How you doing?
Good yourself.
Oh, I'm doing pretty good.
Hey, so how many extra trades do you reckon that would have been? Like that would have made a lot more. You'd be doing a lot more trades, but I wonder how much more you'd be actually doing, because to get that much extra performance out of it, it'd be quite interesting to see what that looks.
Oh, absolutely. Yeah, we can go to the simple returns. Actually, no, I'm sorry. The trade log is where that's going to show up. So, yeah, let's just say, I mean, this is off the top of my head when you're trying to explain allocation factors. Let's say the normal allocation factor, if it was at the recommended amount, this whole swath right here may never have happened. This whole section on the normal allocation may not have happened, but when you're beefing up the allocation factor, yeah, it's going to reallocate more often. So you're going to get this extra. But as you can see over time, it actually is just generating so much more profit because it's taking that profit and then going and investing into other symbols that it's not currently in. So, I mean, I want to say maybe once or twice when I was playing around with the allocation factor, I either broke even or I think I actually hurt the performance a little bit. But that, I forget if I was trying mutual funds. It was a number of years ago when I was doing that. But for the most part, yeah, it does create more trades. But when you're making money, is it going to matter? But it did when we're getting charged per trade. Now you don't want to do that. But nowadays with the trades being free like that, why not go ahead and just take advantage and do it? But did that answer your question or?
Yeah, it did actually. Yeah, that's very interesting to see that, and definitely going to play around with that.
No, absolutely. That's why I love doing that. So I suggest, but as I scroll, you can see, look at all this reallocation. So this was an active, well, again, this is in 2020 with everything going on. So sometimes, and that's kind of the other thing I've kind of found, some of my portfolios that I had beefed up with the allocation actually protected us when COVID broke and the market tanked. Because it allocates so often, some of my portfolios reallocated right before the crash, so it saved. It took all those profits and just started to get into new positions on other stuff when that broke, and then it went ahead and got out of those, so it actually protected a lot of the profits. But go ahead.
Okay, great. I'm definitely going to try that. What about with some of these new like tech stocks and stuff like that at the moment? Because we don't have a long history with some of these companies. Have you played around with that and seen how that works?
I've tried. Bob had given me a project. I think they were called gig companies, but it's some of the newer companies that have been out only like a year and a half. Trying to remember what the story was on those, but he's given me a couple different ones where I think ones were called like unicorn stocks that were fairly new and they were big out of the gate and then they kind of died out. But the other thing he was having me research were companies that are more environmentally friendly, or like the tech stocks where they're producing items for consumption or for use, were their emissions in their factories more green or environmentally friendly. So we were starting to work on some of those. So I do work on some of that and with tech stocks.
Okay, thanks, Jay. Thanks.
Oh, you're welcome.
Hey Jay, how do you define allocation factor? I put a question in.
I know that Bob can explain it better, but I know it's a percentage of each symbol that's in the portfolio. Let me see if I can get back to.
I asked the question: is a factor of 0.11, like 19, the maximum of your total funds going into a stock, and say a factor of 0.05, the maximum of 1/20 of your total funds going into a stock?
I think
like it would be the natural definition, but it may not be exactly.
I think that's pretty much dead on. I need to write some of the stuff down that Bob talks about because he says some really good stuff, and I try to remember every little detail. But I believe that's what he said. I know, the allocation factor is a percentage of the portfolio for each symbol that's in there. And you are starting to take away from some of that when you up the allocation factor, but in a lot of respects, as you can see with this demonstration, it does help the portfolio and help the profit. So yeah, it does. It does make the portfolio work harder. It does make it work, more active.
But increasing the allocation factor as you've done would actually end up with fewer trades rather than more trades because you're actually putting more money of your total funds into a particular stock.
Yeah, I see what you're saying.
It would force you to reallocate more.
Correct. Yes, that's correct.
Thanks.
You're welcome. I think I'm gonna try something here real quick. It's like, yeah, since I can't see the chat line in on YouTube here, I just hope that this made sense. If it was detailed enough, if I answered enough questions, I know time is restricted and it could take hours for me to really dive more into this, but I'll talk to Bob about it more and maybe go ahead and do more videos or not, more training shows on this to go into a little more detail. Because like I said, time does go by really fast, and I know I didn't get to show some stuff over again, so everyone's really getting it. But I hope I at least helped a little bit on how to pick symbols.
Hey, Jay?
Yes.
Mike McCord here. Okay, let's say I've got 150,000 sitting vacant and I want to do this portfolio. When and how do I fund that? You've got the 31 stocks. Let's say I want to do that portfolio.
Mm-hmm.
Do I buy them all at once according to the allocation, or do I wait for the buy signals to come up through Wavetech?
That's a good question. I know we've been trying to cover that. I believe like last week and the week before, we were starting to cover that in those training sessions. It's a very important question. How do you start engaging in a portfolio? I wish Bob was here to help with this, but we are going to cover this in more depth. But basically what you do is on open positions over here to the left, when you go to this is going to show you the list. And right now, this portfolio is really in it. It's got a lot of symbols right now. So one of the things you'd need to look at is the entry date. So Apple, it's been in since April 20th. Yeah. Do you want to stay with that because it's been in for so long? It might get out soon. Is it at the peak? And now it's Apple, and that might go up more because it's Apple. But let's just say that's another stock that you don't know as well. When it's long in the tooth like that, you're taking a risk of, well, it's probably going to get out soon if you were to jump in. I mean, you could mimic what it says here. It shows the entry price and all that and the percentage of the portfolio. But what I would do first is try, like right here, 1019. That was that was 12 days ago.
6 days ago, yeah.
Yeah. So thank you. 6 days ago. So that wasn't that long ago, and you showed it just gone up a little bit so far. So I would try to stick with get in slowly. You don't just jump in all at once, but go in slowly and start looking at the positions that have been open recently. And I would maybe 2 weeks, maybe 3 weeks, but just something that's more recent. Definitely not something that's a few months.
So really, if you've got idle money that you need to get working, you need to go out and build you a portfolio that has recent entry dates. Is there a way to screen for that?
There is, but this is still, how do you say it? This could still work where you're using a portfolio like this. What you could do, it's both in home and in research. I'll show you real quick. So when you click the home, down here in model overview, you're going to have all four of the trade systems. And also, I'll just show real quick, it's the same exact thing. When you're in research, when you go down here to all stats, give it a second. It's going to be the same thing, model overview, and this is the same exact information. So down here, this is going to give you an idea of the most current list. Now, the weekly models, they get in every Monday morning. So the weekly, this whole current entries of 67 and 92, that'll stay the same number the whole week because the weekly models only trade, after
On
Friday's
Monday.
close. Yeah, so for Monday. But on some of it, what we've been telling clients that are wanting to ease in from their real world portfolio into Wavetech portfolios is sometimes going with the daily 1.2 model, even if it's not optimized. That's the most aggressive model that'll kind of help get in and out of positions. But what I'm going to show you right now is, since this is daily, this would be as of this morning what you would have bought in, and then tonight after the database refreshes and updates from today, this number will change, and then that'll be for tomorrow's open. So give it a second, it's loading up here. But as you can see right now, with everything going on in the market, the system's actually selling out of a lot of positions. But this will give you the most current up-to-date buys. And right here,
I take that report and do the download report, throw it into an Excel schedule, and sort by the system MP, and you get a 10 or an 11, which 11 are buys, 10s are sells.
Okay, I got you. Yeah, and
makes it a whole lot easier to do what you do, to where you're only dealing with the buys.
Right. And I guess what we could suggest, because I know Bob definitely did say this, whether it was last week or the week before, this tool right here, this list really isn't the best way to. I mean, some clients were trying to build portfolios out of this, and you're not really sure what you're getting unless you really sift through all these sheets, all these pages, and find some good good symbols. But like what you're saying is, okay, yeah, you like the big block 427 portfolio, but not everything. You're not able to get into every position right away. But what you can do is start gradually getting in and picking those open positions that's only been open this month. And in the meantime, if you want to still stay active, you could go with this and look at these companies like American Airlines, and just make sure you're checking
and then sell out of those and go into the other when the proper signals come, I guess.
Yes, absolutely. Yeah, when you start getting more current signals, because they're gonna buy into some of them that are flat right now, and then those open positions will sell, and then they'll get back in. So you can do this for a while. To ease into that, you want to be active and everything. Maybe the other thing, I have a few portfolios. I have the small block, like the small block Hemi Cuda right now is really, really doing well. And that is strictly daily. I'm running all daily models on that portfolio. And what I did is I didn't just take the symbols and put them in as daily. What I did was I think I did like 130 symbols, and I just optimized daily and weekly. And what I did was everything that was optimized daily out of all four systems, I took those to build that portfolio because I wanted the absolute best out of all four. That, so out of the four, daily 1.2 or daily 3.2 was the best model for each of those symbols, and that's how I made those portfolios. So right now, the way the market environment is, those daily, normally daily isn't as good. Weekly is what you want to stick with normally, but and we're probably getting out of that at the end of this year, and we'll go back really optimizing weekly. But right now, given everything going on, daily has been doing better. But what you could do, and I do have all my portfolios right now that I have released for clients to use is under subscriptions. So actually, I'll show you right now. When you click on subscriptions, right here, all of mine are under motifs. So you'll see like motif COVID Crusader, motif Raiders. Actually, the small block Hemi Cuda is right here. So all of my portfolios start with motif, and I will be adding more to this list. But when you click on this, I'll just show this one as an example. So right now, Hemi Cuda is up 34% for the year. So it's just screaming. So this, you can look at the performance, and this is what it's done. So what you might want to do if you want to be that active right away is to maybe go between these two portfolios or even another one and just take the most recent open positions and play around with those until you settle into the one portfolio that you really want to fully engage over time. That might be a better way than you can still do the open positions that were open today or yesterday or like tomorrow, but but I kind of suggest this because I've done the research, I've done all the homework, and the track record, the back testing shows you what you're, what we're dealing with.
Yeah.
And this one's got 17 symbols. So, under active stocks, it's going to show this is all of them. Down here, active CSV. Yeah, this active CSV file will give you all these symbols, but I'm kind of curious on the open positions. But yeah, I think maybe that's a better thing. Just kind of use a couple of different portfolios and then work.
Well, most of those are October's right there.
Yeah, yeah.
Date.
See,
there's only 2 of them prior to October.
Yeah, and again, yeah, these are on the daily.
That's a small portfolio.
Yeah. This is small portfolio. This one, I believe I was modeling after like $20,000. I think the starting equity we can actually find out. Yeah, when you hit the ST, that's the stats or the statistics on the portfolio. When you click on that little ST box, okay, this one was 100,000. I've done a numerous ones where it was about 20,000, 40,000, but it's a lot of beginning equity for only 17 symbols. But that number can be played with.
Yeah.
I might even do that since these are so high performing. I might do that where maybe I take a few of the symbols out and I start the equity at 40,000 or something. Because I've been trying to help clients that have smaller 401ks or smaller portfolios to help them. Because I came from the institutional mentality of no less than 100 or 150,000 up to 500,000. Like, whoa, let's scale this back a little bit here.
Yeah, you got individuals in this thing.
Yeah, oh yeah, and it's been a lot of fun to build this community and everything. So I hope that helped. I hope that answered something.
That did. I appreciate it.
No, you're welcome. So, anyone else out there have some questions? But like I said, this was fun. I had to get some of the nervous jitters and the butterflies out of my stomach and not be so nervous to host more of the show. But if this has been helpful, I think I definitely need to do it again later and kind of go over it again and maybe cover some other sectors or something like that. But I hope it's helped and been beneficial for everybody.
Hi Jay, Richie here from Berlin.
Hello.
How you doing?
Pretty good. How you doing?
Yeah, good show.
Oh, thank you.
It's all relaxed and like the vibe and no worries about the jitters. Didn't come across. That's kind of the informal nature of these webcasts. So it's just nice casual listening. Just pick up the tips as we go. Get into some details, see how you do your thought process. That was fun.
Oh yeah, and it is. I just again, it's just been so great building this community and meeting a lot of people, and it is. I'm getting out of my comfort zone of hiding in the shadows and not talking. Maybe I don't come across that way. I used to be really, really shy, but I'm overcoming that. So Bob's helped a lot with all that.
Now that Bob's out of the picture.
Right. Now he's out of the way. Let me just run the thing. Oh, just talk and have fun and make some money together. No, I do. I appreciate the compliment. It's I'm not just hiding and stuff, but
it's a process, for everyone that's getting accustomed to the software, to the research tool. Like you say, you need to give it some time, some months to see, any particular symbol, a stock could go any particular way in any other day for whatever reason. So you have to build kind of a relationship with following symbols, tracking symbols, and the different models, and build comfort with that. So it's a process, and just these webcasts are cool just to tune in and keep that process going.
Yeah, absolutely. One of the things I want to say, and maybe it'll help you out. I as you're talking and everything, I finally was able to bring up the YouTube chat and everything, and I do want to reply to where now that we've been talking about mutual funds and 401ks, I do have some mutual fund portfolios. I'm going to dust them off, relook at them. I haven't really, none of the institutional clients were using them, so I never really updated them. Other than if a symbol had stopped trading, I would take it out. But I'm going to go back and revisit those and actually release some of those on the subscription list, so that everyone can have access to them, and hopefully they'll be beneficial. Just want to
I'm
help
playing
everyone.
around with the ARK Invest ETFs and rebuilding those in my portfolio.
Yeah.
And then just tracking those signals.
No, absolutely. I've done that too. Bob put me on that. I think it was like a year and a half ago, 2 years ago, and what was it? Dissecting them, reconstructing them backwards, engineering them, and taking the constituents out, which perform better. But I'm learning a lot of this as I go along. Yeah, what are ETFs? What are ETNs? How does everything work? That kind of stuff. So I'm learning a lot as I go along. But you're coming in loud and clear. You said you're from Berlin.
Yeah, I'm based in Berlin.
Okay. Yeah. Base? Are you in the military?
How do you feel, son?
Yeah, get your butt out of bed.
Motherfuckers here.
Ready to kick some butt, sir. We're gonna take these markets on.
Yeah, I'm into renewable energy, solar energy. But,
okay.
Got inspired out there in California and ended up in Germany.
Oh wow. Yeah, it looks like a beautiful country. There's a lot of nice.
Some green spots here too.
Yeah, there you go.
I'll leave the mic for someone else. If there's any other questions coming through, otherwise, great show tonight, great session, and every time we pick up more skills or ideas or understanding. So it's not about getting it all at one time. So.
Right. No, totally. And just adding. Each week helping Bob a little bit and adding my 2 cents here and there or my perspective has helped. I was nervous the other day when he talked to me saying, okay, you're going to run the next show. And I'm like, oh dear, help me. I'm not ready for this, but no, it's been fun. It's been totally fun.
Yeah, it should definitely be at least every second or third or whatever week your show.
There you go. Yes, absolutely. So I just hope it's been beneficial. I think it's been a good show. We've been covering some really good topics lately.
Mixes it up.
Yeah, and this one's important. And like I said, I think we'll have to do another one where I do go over the procedure again. I know everyone can watch the replay, but I can cover other stuff that I may have forgotten or just ran out of time to show this time around, because it's a very important topic. And it's been something everyone's been asking for months now. And I've been trying to find extra time on the weekends or whenever I have a little extra time to try to make some videos to show this. And, I'll make part of the video and it gets messed up or whatever the case is. And I just never gotten a full video together. And then when Bob said this, actually he told me on Friday I'd be mainly hosting the next show. Over the weekend, I was thinking, what am I going to do? What am I going to cover? And I'm thinking, gosh, this is an awesome time to show how I actually go into details on how to pick the stocks and how to select them and develop a portfolio. So it's been enjoyable, and do more of them.
Yeah, and like I've also been playing around. Obviously, I see which symbols are having which returns, and also kind of weeded them out. And although I haven't put so much time to that process, then when you come on tonight and show your process, and that's like a key part of it, but with some kind of consideration for the history of a symbol, then it kind of reinforces that kind of discovery process of using the software and just the process of like becoming your own fund manager, basically.
Yeah, and I didn't even see it that way, and I didn't know that's what that meant. Bob had said that, where you're putting together a portfolio, but you're putting together your own mutual fund. And I love this over trying trade individual stocks and looking for the next hit is I've really enjoyed over the years building these portfolios and letting them run for years and make, there's so much potential, but I will have to, because there's some things I will do another show and show some more of the details, because there's a lot of little intricacies of how to really look at the recent trade logs for each individual symbol. And a lot of clients, everyone really is learning how to do that. And at least I can talk about it and say, well, look at the trades, look at what it's done over the last year or more. That'll help, determine how well the stocks are performing.
Yeah, so it's obviously very much about a process of managing your wealth fund, and maybe not so targeted for the short-term trades like of days to weeks, which I use also. I go through all the signals, buy and sell of all four models. Like I'll look at the weekly models once a week and then the daily models every day. And we get situations like whatever yesterday or the day before yesterday, where on Monday the market kind of just has a big blowout. You're looking at signals you have for that morning to say buy some things and then they go down, or sell some things and they go up. And where you've said before, both you've said, Bob and yourself, if you get a signal on something, especially in the 1.2 daily model, you got to use a little caution to make sure that the stock isn't at an all-time high and you're going in at a high point, because like maybe the only way is down.
Right.
But then when it comes to having the symbol in your portfolio, and then you have to execute those trades in order to keep aligned with those constituents and the allocations in the fund or in the portfolio, then that's going to be a little trickier, I guess. For if you're having a portfolio and managing it on the portfolio, it's not necessarily true, but it should be one of the weekly models that you follow closely, and definitely not a daily model. Although it popped up today that in one of your portfolios that you built, there was one symbol that had the daily model in there.
Yeah, and that is the thing. I mean, normally, and that's another thing. Not only did I have to change my train of thought of building large portfolios, but scaling down to smaller, more manageable portfolios, but also normally with the institutional clients, they were running the weekly models. They're running more longer term, or like with Portfolio Expert platform, which also has the monthly trade system as well, or trade model. It can do monthly, which obviously is very long term, and that's what fits the institutional clients. But that was another train of thought I had to change. Even though weekly models do normally trade better, a lot of the clients do want to do more of a more active daily type trading, and the daily models, maybe that's what they're going to build, and that's what works. Other than, this year a lot of the dailies have worked better than they have in previous years, with the calmer market environment, or market year. But again, the daily models do well, and that would benefit them, especially maybe the daily 1.2 would benefit them, because that is more active, and a lot of clients, what's the next biggest trade? Well, go ahead and build a daily portfolio and see what comes up. And so, well, it's nice to meet you. Thank you for chiming in.
Yeah, cool. Yeah, we'll catch up again next time.
No, absolutely.
Good job. Shout out to the rest of the community.
Oh, totally. And thank you for the compliments. I appreciate it.
Nice work, Jay. I'm just curious where the Wavetech and the Portfolio Expert are different subscriptions, or you can switch.
Well, what we're going to do is Bob is going to work on the final preparations to release it for the retail clients. I believe he said on Thursday is what he's shooting for, so we gotta hold him to that. So I believe sometime on Thursday we're going to release Portfolio Expert as the premier subscription. So and that's part of what he's doing, and part of the delay, he's working on documentation and working on a video that's going to explain the added features that Portfolio Expert offers.
Do you have a price that's the same? The Wavetech can switch to there, or are you gonna have different charges for this?
It's going to be more. I don't know exactly what it is yet,
Okay.
but it's definitely going to be more because it's a premier. There's a lot to it. There's a lot of added features, and it's a very, very awesome platform. I love working with it. It's a little easier on the eyes, but yeah, it works really well. So yeah, it's going to be an increase. But he's going to go over that when he finalizes everything for Thursday.
So with the portfolio expert, you can't see the grade either, right? You have to use a trader station to see the grade.
Correct, and yeah, that's the other feature I know he's working on. A lot of it right now, the delays are actually on the trade station side. There's stuff they've been working on, and he has to hear back from them. But that's still a feature that he's working on. That will happen, hopefully sometime soon. It should.
Thank you.
Oh, you're welcome, and thank you for joining the community.
It's great. I think it really helps, and I don't know. So for the people who don't trade that much, do you think the Wavetech is good enough, or you have to switch to the portfolio expert?
No, the Wavetech is really good. It's just there's a lot of things I think are a little easier in Portfolio Expert, but there's a lot more features, and portfolio development is a lot better or easier in Portfolio Expert. And I over the years I've been actually converting to Portfolio Expert and learning how to use that system. Now I've got to revert back to Wavetech and reteach myself all that stuff. But Expert's it's an excellent product, so I think it would be, if you're able to step up to that subscription, I definitely recommend that.
Okay, I heard that Wavetech is in all the platform. The portfolio expert is in a new platform, right? It's relatively newer.
Correct. Yeah, Wavetech was built, I believe Bob said 2002, something like that. So yeah, it's definitely an older. That was the first product. So we were converting all the institutional clients over to the Portfolio Expert, but when we opened the company to the retail side, we brought Wavetech back as the introductory platform. And once we were able to, we had to modify and change some things for Portfolio Expert to handle retail as well. But we just went ahead with Wavetech at first as the entry level platform. But it's still an excellent platform. Either way, you can build some awesome portfolios and make a lot of money.
Definitely.
Jay, I have a question about.
Go ahead.
Jay, how will Portfolio work for within the Mac world and iOS platforms like iPad? Would it be web-based, or is it going to be how is it going to be presented over the?
I'm gonna ask Bob about that again, because the last he had talked to me about it, he was because right now, yeah, it's different than Wavetech. It's not web-based. Web-based. It's actually a download platform. It's download software, and we used to have a Mac download version, but there were so many compatibility issues that we had to actually eliminate that download link and just strictly go with PC. But now that we've got so many users and a lot of users that use Macs, that was what Bob was talking about. And I know that was one of the delays, was that they're trying to convert it over to a web-based, just like Wavetech. It's going to just be online on our website, and you would just be able to access it whether you have a PC or Mac. So I know that was one of the delays of converting it. And I believe if he's saying that we're releasing it on Thursday, they must have solved that. I will check with them again, but that was one of his main concerns, was to get it converted so that Mac users won't have compatibility issues. So they must have solved that.
I hope so. Thank you.
Oh, you're welcome. Are there any other questions out there?
Hey, Jay. Yeah, mate, you're doing a great job. I'll tell you now. You did a great presentation.
Oh, thank you. I appreciate that.
All right. No, you did really well. Hey, the new Portfolio Expert, will that show the PPMs? Do you know?
I'm not sure exactly how he's running that. You can actually, it's a little better. You can put them on there. Now, like I said, now I got to go back to how do I use Expert, because now I had to relearn Wavetech. But He's gonna hurt me if I don't have the right answer. But I thought the PPMs were on here, but he's gonna work that out one way or the other because I know obviously PPMs are huge and they're very important. But yeah, I thought they were an expert. I'm not seeing him right now, but I'll have to ask him. But I know either way they're going to make them available because it's very important.
Thanks, Jay.
Oh, you're welcome. And again, thank you for the compliments. And I know on like on YouTube on the chat line, everyone has been saying good job. I thank you guys a lot for joining today, and thank you for the kind words. It goes a long way, and I really do appreciate it. And for everyone in Zoom right now, what I was able to do, since I couldn't see the chat earlier, I was able to go through and cut and paste into a Word doc. So I'm going to read through the questions and do my best to email. If I can answer questions, I'll email and reply to everyone the best that I can. So if that was it, we will end the show on that, and I know I'll be hosting more shows soon.
Very good. Thank you so much. It's very good.
Oh, you're welcome. So, all right. I know there's still quite a few people on YouTube. We got to smash that like button a few more times on there if you guys haven't done that yet. But thank you again for joining us today. And we are going to have the live show tomorrow. It is going to be a little later. I know Bob went over that. I'm just in case anyone joined us late. Tomorrow's live show, I don't know if it's going to be at least an hour delay, but it's going to be a little later than normal. So, yeah, thank you again, Wayne. I always would love hearing from you. It makes me homesick for Melbourne. I miss Australia when we used to live out there.
You would miss it at the moment, especially with what's going on in Victoria.
Oh, I bet. And that's where, that's. I'm sure I won't. But
stay where you are in Arizona. I think at the moment it's safer.
Yeah, totally. So, thank you for that. I'll cancel my plane ticket out there. Thank you. And,
well, the Tigers won the grand final anyway.
Oh, did they? Oh,
that's my team.
Oh, they beat Geelong. Wait,
Yeah,
which one? Say it again. Oh, is Geelong your team?
No, Richmond Tigers.
Oh, Richmond is. Oh, so you said Richmond won't beat Geelong? And I don't have a screenshot. I got my Geelong shirt around here somewhere. I bought one off eBay. Yeah, I love Geelong. But real quick, I want to say a quick Steve on Zoom. Thank you for the kind words if you're still on there. On YouTube, Christoph and Jake, thank you guys. It's been a lot of fun. I see Richard on there too, and Coimatic. You guys take care, and I look forward to tomorrow's show. So cheers, peace, everyone be safe and healthy out there. You guys take care.
Yo, good night.
All right, good night. Thank you. Take care.